I was scrolling online and came across a discussion about how expensive the San Diego housing market has become. The claim was that the typical household now needs to earn nearly twice their income just to afford a home here. Now, I want to take this opportunity to explain the reality of the San Diego market from the perspective of a real estate agent with extensive experience selling homes here in San Diego County. By walking you through a recently sold property, I will break down the mortgage structure and show you how a family was able to afford the monthly payment in today's market. Now, recently, I actually just sold a property, and this property is right here in San Diego County. It's not too far. It's in the Chula Vista marketplace. But what I want to get into is the specifics of how this family was able to afford this home. And you can look it up. It's public record, but you can get into the specifics of this home was sold for $655,000. What we're going to do is run it. And so I'm going to be able to show you how this worked. This property closed back in September of 2025. And this is a family that I had been working with for months to try and find a good deal. And that's probably the biggest thing. If you have a buyer looking for a specific product, make sure you're working with a real estate agent that can go after that specific product, whether it be a certain neighborhood, whether it be a certain school district, maybe it's even a certain price point in a certain location. Those are all very specific details. The more detailed you can get as a home buyer, the easier it is to find the product that you want to call home. So specifically in this case, this was a $655,000 property. This client put 20% down. They put $148,000 down. That made their mortgage payment $4,000 a month. Now, $3,100 of that was going to principal and interest. $643 of it was going to taxes, and $191 of it was going towards their insurance on the property. Now, some people might say, well, who's going to get $150,000? Well, this particular client just happened to have that opportunity. Even if we just change the circumstances, so let's say that they're not putting 20% down, let's say that they only put 10% down, and we rerun these numbers, you can see that it didn't drastically affect the payment. It lowered the dollar amount that they had to come in with, but it takes a lot of money to affect your payment a very small amount. And I think that's one of the key things that all home buyers need to understand in this marketplace. It does take a lot of money to affect your payment, just a small amount. On average, $10,000 is $10 in your monthly payment. So when your lenders are looking at specifics on how to qualify you, they're never looking at purchase price. They're actually looking at your monthly payment. Now, after sharing that real experience, it helps to step back and let's look at the broader data, not opinions, not headlines, but what the current studies and housing reports actually show about the affordability in San Diego County today. San Diego is often described as one of the most desirable places to live in the country. The weather, the coastline, the job market, the lifestyle that it attracts people from all over the United States. But when it comes to buying a home here, the big question is actually very simple. How much do you really need to earn to afford it? Let's look at the real numbers so that you can understand the market clearly and decide if San Diego actually makes sense for you. What does the typical home cost in San Diego? Recent housing data shows that the median home price in San Diego County is close to $900,000 to just under $1 million. Median means half of the homes sell for more and half sell for less. That price alone does not tell the full story of what's going on here in San Diego. What matters most for buyers is the monthly mortgage payment. If a buyer puts 20% down, like we just showed, and finances the rest with a 30-year mortgage rate at current interest rates, a monthly payment, including the principal and interest, property, and taxes, is typically $5,500 to $6,500 per month. Not too far off from where we were. That monthly number is what households actually have to live with. Now, what's interesting, though, is that those numbers that I included, obviously I'm showing you $900 to $1 million, and then I showed you a purchase price of $655. You can see that $2,000 a month. Now it's $2,000 a month, but look at the amount of purchase price that was included in that $2,000 a month. Just take that into account. So how much is needed to support that type of payment? Most lenders follow a long standard guideline. Housing costs should be about 30% or less of your gross household income. So if we use that rule, a $6,000 a monthly mortgage payment requires an annual household income of roughly $240,000 to stay within that comfortable range. Now, this is not an opinion. This is basic mortgage math. Now, how does that compare to real household income in San Diego County? Well, the median household income in San Diego County right now is about $110,000 to $115,000 a year. This means that the typical household earns less than half of what is needed to comfortably afford a median priced home using the traditional lending standards. Because of this huge gap, studies show that only about 12 to 15% of households in all of San Diego County can even afford a median priced home with conventional financing. This is why so many people feel just absolutely priced out, even though homes are still selling. What does this look like in real life though? A household earning around $240,000 a year brings home roughly $15,000 to $16,000 per month after taxes. And now all that depends on your situation, but from that income, a $6,000 to $6,500 a month mortgage payment leaves room for essentials like food, utilities, transportation, insurance, savings, and enjoying life in San Diego. For households earning closer to the median income, that same mortgage payment would take up more than half of their income, leaving you very little room for basic living expenses. Is where affordability breaks down. Now, a lot of people ask, why is San Diego so expensive and why are people still choosing it? San Diego is one of the least affordable housing markets in the country based on price to income ratios. That's a fact, and that is supported by multiple housing studies. Now, at the same time, people continue to choose San Diego because it offers things that are hard to find anywhere else in the country. It has a strong job market in industries like biotech, healthcare, education, military, and technology. There's a high quality of life in San Diego County. We have beaches, outdoor living, and year-round mild weather. I think the average 75 degrees. The long-term demand that has historically supported home values, yeah, it's still there. San Diego is not a market that is built for everyone, but for households that truly can afford it, many decide the lifestyle and the long-term value, they're worth the investment. They're worth the investment of purchasing a home. Now, here's the bottom line. To comfortably afford a median-priced home in San Diego, a household generally needs to earn around $240,000 per year. That's based on a standard mortgage guideline. The typical household earns far less than that, which is why affordability is such an issue and a challenge in San Diego. Understanding this helps buyers make very clear decisions without hype, without false expectations. So if you can afford San Diego, it can be an incredible place to invest. If not, knowing the numbers allows you to plan smarter, explore alternatives, or wait for just that right opportunity. Either way, clarity is power. Once you understand San Diego and how it really works, you can decide confidently if this market is right for you. If you ever have any questions, I'm always here for you, or put them down in the comments below. I'm happy to answer anything that you might have. Thanks. Stay tuned for the next one.